Good afternoon, Maverick traders. It's market roundup time. Joe with you here for the 5th of March. It's Wednesday. Let's get into it. I've got my 2 cents on the markets. I'm going to go ahead and take a look at some things technically, and if I've got some trades to share, we will.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, folks, you're going to see that we actually got kind of that bounce that we were expecting at these levels. And it looks like the market's kind of subsided there. So real quick, let's get to the daily news. The markets hold on a technical support level. And that's pretty much where I'm going with this. Political uncertainty remains. I don't know if you guys watched The Bachelor last night. A lot of pushing, a lot of pulling, a lot of accusing, a lot of bad blood there. But political standings aside, folks, and I'm just going to echo where we're at here at Maverick when it comes to market agnostic. It doesn't make a difference because the truth lies in where the markets go. So it's going to have an impact, and it still will have an impact, I think, to the bear side. But we did get that bounce off that level. So ADP, much lower than anticipated. I believe that was on its way anyways. The beginning of the year, we talked about tariffs and sanctions on all sorts of different countries. And you think about the private sector wanting to grow and add jobs with that uncertainty. Of course, this February number was low. I am not surprised it was low, and I think it's going to remain low and continue low. I also think that the unemployment number is going to continue to rise based on what's going on. So let's get to how we finished. The Dow, the S&P, and the Qs all up over 1%. Qs about 1.5%. Even the Russells themselves over 1%. Oil had a little bit of a slide there, and gold remains kind of steady. And this is kind of the same prowess, folks. There's nothing really changing. It's just a reactionary market based on some worries and some fears, or I should say more importantly, uncertainty. Because there's people that agree and there's people that disagree, and that doesn't matter. It's the uncertainty, I think, that's going to weigh on the markets for now. The advanced decline line, 70% advancing, 27% declining. Above below the 50 moving average 63.37. So definitely reaction, definitely a pretty good bounce after that push lower. So let's talk about it. Channel here, it broke down. I was looking for this beautiful flag pattern that actually confirmed, and then we slid. A couple of things to look at. The first line was the support right around that 58.40 level. You could see that was pretty major. We had broken down below it, but the expectations were for some sort of anemic rally, maybe even back up to here. And once again, this could just subside and stay sideways there. But this bounce back up was almost expected. Now take a look at the volume. Not a lot of follow through. Not like, hey, that was the end all be all bottom and we're going to go all the way to the top. So this could be the beginning of at least a shorter term consolidation, or at least a try, maybe back up to this first arrow I drew. We don't need to know what it is, but we did get the reaction in the candle that was expected. So we are still going to stay with our outlook. I'll get there in a second. Let's take a look at the Qs. You can see they did pretty much the exact same thing. It had that bounce after that drop back. Big range candlesticks, big shadows, gaps, retracements. It's all sorts of fun and jumpy, but it's the overall pattern that we have to stick to, which is very difficult to see. There's a saying that says it's kind of hard to see the forest through the trees. And when you are muddled with political biases and you're reactionary to your bulls and your bears, it is difficult to see the overall pattern. We just have to calm it down and take a look at it. This looks a little bit more cut and dry than the SPY, as it could just consolidate and then roll back over. We did get a pretty good piece of volume there yesterday, but today not so much. So we'll see. Where we stand right now, folks, is pretty much where we were yesterday in the beginning of the week. I'll get there in a second. You could tell it was a bounce, and the reason being is because almost everything participated. But we should expect to see maps like this moving forward, either all red or all green. Just depends on where we're at and what pieces of news come out. So let's get to our outlook, and I didn't change it much. We talked a little bit about, hey, if we could see this come back up and retest and roll over, and then we can move to that -2, -3, and I agree 100% with Rob. I love a breakdown and a retest. We refer to it as the kiss of death. Right now, it looks like we might be getting that retest. However, if we can consolidate, maybe move a little bit higher, and then create some sort of an area to maybe move sideways, some sort of a short-term channel, that'll show a little bit more resilient and strength. But we are seeing some of these economic numbers come out weak. We know they're going to be weak, and I think it might create a little bit of concern, I should say, or some uncertainty moving forward with some investors. So we could continue to see some weakness. So I'm going to keep it at a -1, and the reason being is because I'd like to go to a 0 here because this bounce could continue tomorrow, or it could turn right around and fall apart, and that'd be pretty easy to slide it from my -1 to a -2, and then this monthly will eventually work its way down. So we're still glass half empty here, but it's still too early to go full bear until these markets really commit to that direction. But the bounce that we're seeing today was expected. So I don't have much. I've been going through some of my trades. My past trades have either done really, really well or they've done really bad. That's it. It's either make or break. So I just took my notes from the Bachelorette last night, and I realized that we've got gold is strong, materials is strong. Two topics that seem to be a little bit on the bull side. That's totally fine. And I hate playing news, but that's what it is. Now, this FNV is actually a Canadian gold resource company, but we do have MP. They're examples, folks. Just make sure that we go out and check all of those sectors because there are strength in them, and there's a lot of charts that look like this. On the bear side, utilities and energy. I just went ahead and just jumped on OXY because I just like the pattern. Nothing past that, folks. Nothing deeper than just price action. This is FNV, Franco-Nevada Corporation. I just like how this moved higher. A little bit of a decrease here in the volume, but it was allowed to float. And I don't think it has much to do with where it's from versus it's just gold. The worries about where the dollar will go might sustain that. It might turn right back around and fall apart. I'm just trying to chart here. So take a look at that sector. There are a bunch of other trades in there that look really similar. MP itself is a high base breakout. Moving over to the bear side, if that's something you're looking at, we got utilities here. I was thinking utilities or energy, Occidental Petroleum here, say energy, excuse me. It looks like it just wants to leak a little bit lower. Now, depending on what event happens or what sort of news comes out, this could easily flip. I'm reluctant because of these retracing shadows. Doesn't seem like this thing's going to spill over and fall apart. However, it did see a slight increase in volume from the previous day. Sideways to down, and I'm sure as heck not comfortable going past 2 weeks in any trade right now. There's just too much reaction out there. So overall, folks, technical analysis should remain the focus. It's very difficult to set your political biases aside. So volatility in reactionary markets can prove very difficult. Now, cash is still a position. If this is something you can't stomach, you don't have to. There's nobody forcing you to go out and trade these markets if you don't believe in them or you don't like them. You don't have to do it. You can sit out. So economic reports that ADP was much lower than expected. Really bad, really low. Now, I shouldn't say it was lower than expected. It did miss the mark posted, but for people to be surprised it dropped that much with the uncertainty since over the last 3 months, I could see the private sector really clamming up. Not sure if they want to, open a new business or hire more people. I get it. Jobless claims and unemployment are coming out here over the next couple of days. I imagine those numbers both go north, meaning jobless claims should increase based on some federal layoffs and unemployment as well. Earnings season is still upon us, folks. We've got Broadcom coming out. We've got Costco, Canadian Natural Resources, Kroger, Hewlett-Packard. All sorts of fun stuff still on tap for us. So, and I believe it's just going to continue to stay volatile. So, as always, just fall back on your plan and follow your rules. All right, guys, thanks for joining me. We'll talk to you next time. Bye, everybody.